Welcome back to my channel. In this video, I wanted to cover Pfizer. Pfizer announced their earnings this morning, and I have a fresh set of financials and earnings release to review and update my analysis on this company. I'm currently a Pfizer stock holder. Overall, the earnings were disappointing. The top line revenue contracted by 6%, and that was a surprise. I was expecting that Pfizer had begun to grow, and I thought that growth would continue, and I was surprised. The pieces that were positive is their profitability is there, as well as their free cash flow, and they are paying a high dividend. Overall, I'm going to evaluate the company and see if I could determine if they have a catalyst for growth. That's important. I'll take a look at the desirability of this business at this time. Overall, I'm going to look at the intrinsic value of Pfizer and see what the company is worth based on their free cash flows and their earnings per share. My investing strategy is to buy companies that are priced below their intrinsic value and hold them long term. The market will revert to a stock's intrinsic value based on free cash flows. And therefore, when I do that long term, I have success in making money. So let's take a look at Pfizer. So, first, their earnings. So, their earnings, the revenue went down by 6%, which was surprising and disappointing, but their profitability is improving, which is good. Their R&D costs are also dropping, which is going to help with the cost of operating the business. So their earnings per share did really expand nicely, which was good. That was a positive note. But overall, I really treat revenue of high importance because revenue shows, is the business attractive to customers? Are they attracting more customers? Are existing customers buying more product? Can they raise their prices? And a contraction of 6% after the company had shown really good growth for the two previous quarters is a surprise. The other pieces within the earnings, it's a very science-oriented company. It's a pharmaceutical company. So they have a lot of information, but it's not relevant to my valuation of the company. Now let's take a look at more fundamentals. Pfizer's a $130 billion market cap company. And the revenues are $63 billion. So you're just paying about 2 times revenue for a pharmaceutical company. Historically, they've been a higher market cap company with a higher stock price. PE ratio is 16, and then it's going to drop to 7.8, showing that this is potentially a very discounted stock. The dividend is 7.46. That's not a bad dividend, and they can afford it. Analysts believe it's a hold, but it's discounted by 31%. Overall, the stock has not performed over the past year. It's down 9%. Year to date, it's down 13%. So healthcare as a whole is in the green. It's positive as a sector. So this stock is underperforming the sector it belongs to, and it's down 13% for year to date 2025. When we look at their financials, the full year 2024, they did have some growth, which was very positive. And the company needs to begin to grow again. The quarter was a miss on it contracting. It had 3 consecutive green quarters. If we look at the 3 previous quarters of Q2 of 24, 3, and 4, we had positive growth that was building momentum. And reestablishing that momentum will be important. If this company grows, I think the stock will really go up. If they don't grow, it's probably going to stay where it's at and pay that dividend. The free cash flow looks good, looks really good. And I'll use that in my valuation. Gross margins look great, 74%. Profit margins look good. Free cash flow margins look very good. So the fundamentals look good. Just the one piece that is missing is growth. They got to start growing. It's really important. Looking at what analysts have to say about the company, we have 14 analysts covering the stock, and they are quite positive on the discount. It's 31% discounted. So that looks good, but it's a hold. Not everybody's fully confident in Pfizer, and I can understand why. Revenue is expected to contract for the next couple of years. I guess that COVID business is still, they still have to unwind it completely. but I'm not seeing the growth that I hope to see in this particular stock. Earnings per share will expand, so that looks favorable, and the forward PE looks really low. So I'll use that for my evaluation of Pfizer. How desirable is Pfizer? Well, I measure that by looking at the strength of their moat, of their competitive advantages, and how they're growing the business, how profitable, and the level of free cash flow business has. And pharmaceutical companies naturally have barriers of entry into their markets because they have patents. So I would rate Pfizer as having really good moats in the businesses that they're in, but they're not growing, and they are profitable and they do produce free cash flow, but that growth really keeps them holding back. And therefore, I'm putting Pfizer in the gray. It's a good business, but I need to have a substantial discount to invest. If they were to grow nicely, like an Eli Lilly or another pharmaceutical company, I can move them to the green, but that's not the case. They need to start growing. Right now, they're in the gray. So, what is the discount available on Pfizer? And I'd like to determine that by comparing the stock price to the intrinsic value of the company. And I'm going to measure intrinsic value in two ways. One is the free cash flows, discounting future free cash flows to today's value, and then looking at earnings per share and trying to arrive at a value based on earnings per share, and blending the two. Looking at free cash flows first, I've looked at their earnings and can reaffirm that they are going to hit this number this year, 2025. So I'm going to keep that number. It might be a little conservative. That's all right. And I'm going to grow those cash flows by 10%. And then terminal value, I'm going to grow by 4%. I moved my discount rate from 8% up to 8.5%. This company surprised me on the top line revenue growth, and I'd like to move up the discount rate. The intrinsic value of all those cash flows is almost $218 billion. I'll add cash and take away debt to get to an equity value of $160 billion. The market cap of the company is $130 billion. So there's about a 19% discount available on Pfizer stock. Earnings per share is actually improving. It got a little better. I'm going to use a PE of 12 and a growth rate of 1%. So it provides a nice discount of 36%. When I blend the two, I get a discount of 25%, which is a decent discount on Pfizer. Analysts had a better discount. Now, this is not a very compelling discount on this company. They are somewhat repairing the business or trying to figure out how to grow the business. So it's not big enough of a discount for me to buy additional shares. For now, I'm just going to hold my Pfizer shares. That dividend does make it comfortable to hold this stock and just collect that dividend. So that's my review of Pfizer. I hope you found it interesting. If you like analysis like this, become a member of the channel. You'll get more access to the tools that I use. You'll get access to member-only calls, and you'll be able to nominate stock tickers on live streams, and I can review them on live streams. So there's a lot of benefits to becoming a paid member, and I'd really appreciate your support. So that's my video. I appreciate you watching. Good luck with your investments.